In our last video, we continued with trend analysis, and in particular, we looked at some chart examples whereby we were able to use everything we've learnt so far in trend analysis and apply our weight of evidence to demonstrate some of the concepts that we've learnt and look at examples whereby we saw trend change. So I hope that was useful, and as we said in the last video, I suggested you go back and have a look at these videos a couple of times, but also go and try this out on charts yourself. So I thought it was worthwhile in today's video to do a summary of everything we've learnt in regards to trend analysis. Initially, we looked at short-term trend analysis, whereby we looked at each bar and we analysed the highs and lows of each bar. We also looked at the treatment of inside and outside bars and how that related to trend. We looked at correctly identifying peaks and troughs, or swing highs and swing lows, and we looked at how we can accurately identify valid peaks and troughs and how this is essential to correct trend identification. It is also essential to correctly identify trend reversals, support and resistance levels, trend lines, pattern lines, and other extremes, and for use with other analysis techniques. So we discussed how on higher time frames we can use one high either side, one low either side, high low either side, and we looked at also how shorter term time frames, due to the volatility, I like to see in the case of a peak two higher lows either side to validate that peak. It just cuts out a lot of the noise. We also looked at anchors to the trend. So in an uptrend, we looked at the last trough that was created before a new peak, and we looked at how that's considered the anchor to the uptrend. And in a downtrend, the last peak that was created before a new trough is considered the anchor to the downtrend. And we looked at the importance of these anchors. We started then to look at how trends end. And in particular, we discussed price acceptance. We discussed how price acceptance is a requirement as part of the weight of evidence required for trend change. We also looked at the exception to the anchor rule, where the anchor is a considerable distance from current price. Therefore, this requirement may be missing for the weight of evidence required for trend change. So what we've tried to do is apply subjective methods and rules to trend change, and we've also included here where price has extended quite a bit. We've applied a rule to that also. We also looked at when change of trend to ranging behaviour. So in this regard, we looked at the trend as it develops as bounded by 2 points. So we have the anchor to the trend in the up or the downtrend. And in the uptrend, we have the peak that's made the highest price. In the downtrend, we have the trough that has made the lowest price. These are the two areas. So until price either breaks the peak in the uptrend or the trough in the downtrend by way of price acceptance, price action should be considered to be ranging. And we looked at, in regards to trend reversals, we looked at our objectives and our learning outcomes. So what we looked at doing was provide an objective method to identify specific areas that indicate potential change or continuation of trend. So the change of trend was our anchors, of course. We also looked at the Dow theory definition of trend change. We also looked at what constitutes continuation of trend, which was our break of in an uptrend, the break of the most highest peak, and in a downtrend, the break of the lowest trough. We also provided an objective method to determine when a trend has changed, reversed, or changed to ranging behaviour. And we provided methods to identify specific price action behaviour that leads to trend change. So we had the examples of demonstration of strength. We had another example was our Dow theory change of trend before the anchor was broken, And then, of course, we looked at our price acceptance concepts, whereby we didn't see price acceptance, but we did see a breach of the anchor, but we didn't see price acceptance. We also looked at examples where we did see price acceptance below or above the price anchor that led to trend change. So we're able to bring all that together in terms of our weight of evidence, and we saw how that led to change of trend. Now, some important points that we discussed along the way. One of those is that trend is the single most important principle that Charles Dow developed, and this forms a key part of technical analysis. So many times we neglect trend when traders are starting out. We neglect these basic principles of trend. One of the important points also was the trend is assumed to be in existence. So the clear implication from Dow theory is that the analyst should always assume the current trend is still in effect until the opposite trend is definitely in place. So we saw how trend attempted to change, but we didn't see price acceptance. So until we see that price acceptance, we should always err on the side of caution. And in terms, let's look at the case of a court of law where we need to apply weight of evidence before we see trend change. And we also adapted Newton's first law of motion, which said that a body or a trend in motion tends to stay in motion unless compelled to change its state. We also looked at some key principles. One of those was identifying the anchors to trend, uptrend and downtrend. We also looked at determining price acceptance. What is price acceptance? And then finally, we looked at applying weight of evidence to determine trend change. Now, I know there's a lot of concepts here, but once you begin to apply these, you will find that these become second nature to your analysis. So in summary, today, we looked at trend analysis and we did a summary of everything we've learnt to date. So I hope this has been helpful in just providing an overview of everything that we've learnt, because this is so important to understand these concepts, because in our next video now, we're going to move on to trend lines, and we will need to know our trend analysis backwards so that we can now begin to apply trend lines. So thanks for watching. I look forward to seeing you in our next video.